with an 80% share price decline in the last year, I still believe Shopify is substantially overvalued. And that's what I'm going to discuss in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up guys, and let's get right into this. So in Canada, and being a Canadian, there's 3 companies you cannot talk ill about. One of them is Tim Hortons, the second one is Canada Goose, and the third one is Shopify. And early on in the life of this channel, when I first started doing the Patreon calls, I actually lost 2 Patreons because they were heavily invested in Shopify, and I told them that the position was worth maybe a tenth of what they were currently paying for the stock at. They didn't believe me, and a year later, the share price is actually down approximately 80%, and you can see that right here. But the question I pose for you guys is, despite the fact that it's down approximately 80%, how can a stock that's declined so much still be overvalued? Well, that's the case that I'm going to make in this video. And let's first start with their expectations for fiscal year 2022. They expect that gross market value growth will be impacted by persistent inflation, and they expect that they will continue to outperform the broader retail market in the second half of 2022. So that sounds really good. I'll show you what the broader retail market looks like in a second. But note that they expect that their merchant solutions will grow as a percentage of gross market value, but the growth rate of the merchant solutions segment will be double that of the subscription solutions segment. So that's another way of saying, and a very complicated way of saying, that subscription solutions will grow at about half the rate of the online retail market growth rate. So I don't know if they purposely intended to write it like that, but it was a little bit confusing and I had to do a double take. But if I misinterpreted it, guys, let me know in the comments. And here's where the US e-commerce growth rate is right now. As we head into a recessionary environment, it may be reasonable to be using a lower than historical growth rate to align with the past 4 quarters. And effectively what I'm saying is higher single digits. And that's not just me saying that. eMarketer from insiderintelligence.com is suggesting that retail e-commerce is going to grow at approximately 9.5%. So they are also forecasting fiscal year 2022 to grow in the high single digits, down from almost 20% in fiscal year 2021 and down from 36.4% in the pandemic year of 2022. So it's just been a straight downwards decline for online retail growth. And I think part of this is it's just catching up to the mean of what the overall long-term growth trajectory actually should be. And here's what Shopify's revenue growth rates have been. Notice it was in 2016, it was 90%, similar to that in 2017, grew around 50 to 60% in 2018 and 2019, surged in 2020 back to 90%, and then in 2021 they also increased by another 57%. So it's just been skyrocketing for this business, and I think a lot of people forecasted this growth rate out into perpetuity. But like a very intelligent investor by the name of Warren Buffett does say, that growth acts like an anchor, and so we can't look at historical results to forecast out growth rates into the future. We have to ask ourselves the question, what is it that's going to bring us that growth into the future? Why would they grow at a rate faster than what the market is growing at, especially when management themselves are telling us that they're not going to be growing exceptionally faster than the market as a whole? And so you can see that I'm actually growing their fiscal year 2022 revenues at a pretty reasonable clip. So overall 19%. And so I'm growing merchant solutions at 23%. So that's a little bit more than double the online retail growth rate that eMarketer is providing to us. And I did that on purpose. You'll see in my valuation. Now, I effectively carry that growth into 2026. And then in 2028 and beyond, I reduce that growth rate to around 14%. So effectively what I'm showing you here is that I was very optimistic with where I see their revenue growth growing. Now, they could absolutely blow that out of the water and grow much faster, but I do believe that based on the current economic forecast and where we see this industry growing as a whole, this is pretty reasonable for Shopify. And I would say that it's a little bit on the optimistic level. And I did that by design because I'm going to show you how crazy the valuation is. But before I do that, note guys, that 80% of the watch time on this channel is from people that are not subscribed. So please, if you can, hit that red subscribe button and hit that notification icon to be notified when I upload new videos. Now let's go right into my valuation. So I'm using a terminal PE multiple of 25 times earnings, which I do believe could be on the high end, but let's just assume that that's reasonable. I get a valuation of approximately $21 per share. Compare that to their current share price of $31 per share. So this company is trading at 150% of their intrinsic value. Now, I could absolutely be wrong in the way that I'm valuing this company. I don't profess to be an expert in this space. So if you guys have a different valuation, if you can point me to somewhere where they value this completely differently and give me a better valuation, let me know in the comments. Also, if you think I'm just flat out wrong, let me know once again. But I provide my model for every Patreon to see. But the question is, how do you get access to that model? Well, you can access that model at the lower tier of the Patreon level. And if you want to join us for an epic live Zoom call every month, you can join us at that upper tier. Now, Shopify might be a tech business that might be a little bit overvalued, at least from my perspective. However, there are tech companies that are doing exceptionally well and could potentially warrant an investment. And I actually covered a very important name that you absolutely need to be following and you may not necessarily be up on, which is Microsoft. They are doing phenomenal things there, including developing their cloud business. And I actually did a full video on that opportunity right here.